there is a cottage industry around describing the manipulation in the silver market. And I am the first to acknowledge that the silver market is manipulated in the very short term. Silver is especially prone to short-term manipulation because of the extraordinarily leveraged relationship between the silver futures market and the spot silver physical market. It is very common for silver futures markets to trade 200 times the amount of silver available for good delivery per day.
The U.S. Securities and Exchange Commission, SEC, defines manipulation as intentional conduct designed to deceive investors by controlling or artificially affecting the market for a security. This conduct includes rigging quotes, prices, or trades to create a false or deceptive picture of the demand for an asset. Many precious metals investors and analysts believe this is exactly what is happening with metals prices, a situation that has been ongoing for at least a decade. It is a common belief in the metals industry that the silver market is systematically manipulated, largely by big banks putting in large naked shorts and lots of high-frequency trading activities just to suppress the metal's price. According to Rick Rule, a renowned investor, speculator, and founder of Rule Investments Media, silver price manipulation has been an ongoing challenge for the metals industry for years, but things are about to take a very different turn. During a recent interview with Resource Talks, Rick discusses some of the most disturbing and important elements of silver manipulation, especially the discrepancy between paper and physical silver. Rick points out that silver has become a truly hated asset due to investors' expectations of where prices should be. However, how far can an asset go under the constant manipulation of some of the world's biggest and most powerful financial institutions, a few of whom have already been fined for influencing or manipulating silver prices? Regardless, Rick is certain that the suppression of silver prices is about to end, but probably not its manipulation as a whole. The renowned investor predicts we could go from suppression of prices to upward price manipulation in a few short years. Whatever happens, Rick strongly believes that silver is a great buy at the moment, and everything that has worked against it in the past is about to begin working in its favor. We will now bring you clips from Rick Rule's interview with Resource Talks. This is a must-watch video for every silver investor and prospective investor looking to get into precious metals like gold and silver. Please watch, share, and like this video. Also, consider giving it a like and subscribing to the channel for more videos. Thank you and enjoy the video.
When silver speculators, for whatever reason, believe that silver should move, and it doesn't move, they assume that all is wrong with the world. And this brings us to the topic that will derive more hate from your listeners, or some of them, than anything else I say, which is the topic of manipulation. That trading desks and coalitions of individuals around the world can manipulate almost any financial market, from markets as large as the euro and the euro dollar to the U.S. Treasury market, to basically all commodity markets, the spot silver physical market. It is very common for silver futures markets to trade 200 times the amount of silver available for good delivery per day. Per day. So if you think about that over the course of the month, 200 times 30, you'll get the sense that often the outstanding value of futures contracts in the silver market on a monthly basis are 6,000 times the amount of silver available for good delivery. The theoretical technique around moving the silver price higher or lower than through manipulation, or at least one way, would be to establish a position, long or short, in the futures market. A laddered position from 3 months, even 30 days, out to 2 years. And then exert influence in the physical market, either long or short, during that period of the trading day when there was the least amount of volume, so that the least amount of money applied could generate the largest move. Let's look at hypothetical math. An intelligent group of traders, notice I didn't say a moral group of traders, but rather an intelligent group of traders, borrows, let's say $50 million worth of physical silver, just for a round number, while simultaneously on the short side, because that's been the easiest thing to do for the last few years, shorting $1 billion worth of silver futures, applying the type of margin that's available in that business, which is to say 10-to-1 margin. So we now have $1 billion short ladder, which stands us $100 million or $150 million if we're cautious. We've borrowed, remember, $50 million worth of physical silver, and we sell that $50 million worth of silver on the spot market, day market, during a point in time when the market is very, very, very liquid. It is possible through this technique to knock the silver price down 4%, 5%, or 6%. And that 4 or 5% move is reflected in the futures market, where we have $1 billion position with $150 million worth of exposure. So in a sense, we have affected a really spectacular leveraged gain relative to the amount of money that we have lost by borrowing and selling that physical silver into the physical market, and then rebuying it and delivering it back to the borrower.
In 2020, the U.S. Department of Justice announced that the New York-based commercial bank had entered into a resolution with the Department of Justice to resolve criminal charges related to two distinct schemes to defraud. The first involved tens of thousands of episodes of unlawful trading in the markets for precious metals futures contracts, and the second involved thousands of episodes of unlawful trading in the markets for U.S. Treasury futures contracts. A DOJ spokesperson revealed that traders of J.P. Morgan's precious metals and U.S. Treasuries desks had for over 8 years engaged in separate schemes to defraud other market participants to enhance profits and avoid losses. Last year, a federal jury in the Northern District of Illinois also convicted two former precious metals traders at J.P. Morgan. They were convicted of fraud, attempted price manipulation, and spoofing in a multi-year market manipulation scheme of precious metals futures contracts that spanned over 8 years and involved thousands of unlawful trading sequences. Rick believes these practices will always be problematic for the precious metals industry. For as long as the global banking cabal exists and calls the shots, things are going to continue in the same fashion, but not necessarily in the suppression fashion. The Rule Investment Media founder and CEO is certain that things will take a completely different fashion in the manipulation of silver prices. Let's get back to the video.
You will note that it was precisely this technique which was used to manipulate the market, the silver market, in the 70s long. The manipulators don't care up or down. They will manipulate a market using the leverage inherent in the futures market, whichever way is easiest for them to manipulate it. Given the strength of the US dollar that we've seen for the last 40 years and the concomitant relative weakness in precious metals prices, for most of the last 40 years, the easiest way to manipulate the price of silver in the short term was down, not up. There will be periods of time, I suspect, in the next 10 or 15 years, when it will be much easier to manipulate the price of silver up. And I think that that will occur with the same degree of frequency that you're seeing now on the short side of the market. I am not one of those who believes in the long-term systemic manipulation of the silver price simply because nobody has had the need to do so. The strength of the US dollar has done a wonderful job reducing demand for silver and reducing demand for silver stocks. I don't believe either that the people who are alleged to preside over this manipulation, whoever they might be, the Rothschilds, the Bilderbergers, the Fed, J.P. Morgan Chase, whoever they are, President Biden, I don't think collectively that they have the intelligence or the patience or the need to engage in a long-term rig. I cut my teeth in the Vancouver Stock Exchange as a young man, and I saw an awful lot of manipulated markets and rigs. And I don't believe that I ever saw one that lasted more than 6 weeks. simply because the conspirators would turn on each other when there was too much profit built into the transaction. And I suspect at the upper levels of Wall Street that the circumstance is the same as it was on the lowest levels of Howe Street in Vancouver. And so for that reason, while I acknowledge and expect the silver market to be manipulated in the short term, I don't see any evidence or frankly any reason for silver to be manipulated on the long term. I do see a situation where what we've observed in the last 50 years or 40 years, the benefits to the economy of demographics, which is to say the baby boomers contributing rather than extracting from the economy. Global peace, which seems sadly to be in retreat. Global free trade, which seems sadly to be in retreat. But importantly, ever lower interest rates, which are very much in retreat. I see a circumstance now where the wind is shifting from silver facing a headwind to silver and gold having the wind in their sails. Be very clear, or I should be very clear with your listeners. I don't own gold as an example because I think it might move in US dollar terms from $1,925 to $2,100. This $2,000 level means nothing to me, nor do moves that last a week or 2 weeks. I own gold because I'm afraid that the set of circumstances that we face today will cause gold to go to $6,000 or $7,000. I suspect that the move in front of us will be much greater. And my experience has been over 49 years that the markets, when I say markets, I mean precious metals markets, are led by silver, by gold, pardon me. But when that momentum and when the narrative is established, as we said before, silver moves further and it moves faster. And the silver stocks move the farthest of all.
Rick's prediction that those involved in the manipulation of silver prices will switch from price suppression to outrightly boosting the metal's prices is one of the many scenarios analysts have touted about the endgame in the past few years. Another scenario is that as the dollar gets weaker, more investors will begin to see the need to invest in metals like gold and silver, and all efforts to suppress metals will become futile. A third scenario, somewhat close to the previous two, is that we are facing an imminent collapse of the global monetary system, the end of the banking industry and the banking cabal. Proponents of this theory believe when it happens, everyone will rush towards gold and silver, the only real money that have survived thousands of years and scores of eventually worthless fiat currencies like the dollar. With no banking cabal to regulate prices, things will take a different turn, and assets like gold and silver will assume their natural value. What do you think is the true value of gold and silver? Do you agree with Rick Rule's predictions about the end of silver price manipulation? Please share your thoughts with us in the comments section below. For more videos like this, ensure you subscribe to the channel, turn on post notifications, and check out our other videos. Thanks for watching.